What's up, guys? This is Carter Thomas with Coin Mastery TV. We are back in action after a pretty solid hiatus. Man, a couple of weeks now. Appreciate everyone reaching out, both all the positive comments of people saying, hey, when are you coming back? And all the trolls that were like, oh, you take off in a bear market. I love it. I think it's great. It's great to be back. Back in the saddle and hopefully helping everybody make more informed decisions. If you're new to the channel or podcast or wherever you're finding this, make sure you hit the subscribe button or the like button or whatever else may be available on your screen right now. So today we are talking a bit about a lot of different topics. Now, we're not going to go too deep into any one thing because, to be perfectly honest, I've been traveling around so much, I haven't had the ability to go super deep into crypto. I've been really keeping my eyes on a lot of different macro forces. So what we're going to do over the next week, maybe even 2 weeks, touch on crypto, touch on some other things that are happening within the crypto sphere as they relate to the global market. Because I actually believe that that's where the real big story is. And I think crypto is going to slowly be absorbed into that. And I'll explain what I mean by that in a little bit here. Yeah, so we're just going to get rocking. I'm probably going to try to do this 2 to 3 days a week just for let you guys know. And of course, none of this is professional advice, as you guys know. So please do your own research whenever you're making any sort of financial investment. So let's look at Bitcoin real quick. So I guess I'm looking at the daily chart here. I'm looking at Bitfinex for simplicity's sake. Nothing crazy here. No big technical indicators on the chart because we're really not going to get into levels right now until I see some major action happening, which there really isn't a whole lot happening right now, at least in the last 5 days or so. So until there is, I'm not too concerned about it. Now, I think that the big question in my mind is what's the length of this particular accumulation phase going to be? Now, I was actually in Grand Cayman Island like 2 weeks ago with my buddy Chris Dunn and Rocky. You guys may know them. Some of you actually have heard of that course because of this channel. And we went down there. It was like a mastermind thing. I gave a presentation on about what I've done with Coin Mastery and also the crypto markets in general. But it was really cool to see them talking about trading kind of as it was having that dump down to 6,000 and below. It was like really like live on the screen. That was really cool. And one thing that they really kept hitting on, which I think is so key, is knowing what the larger trend is and remembering that this is not some altcoin where it's just, it's just going to start pumping and we're going to go straight to 50,000 and that's the end of that. This is a living organism like any market is. And so just realizing that this is a potential accumulation period. And the real key is trying to see what the trading zone is. What I mean by that is you see how these highs are getting lower and lower, right? So we look at, right now I'm looking at March, May, and then recently the July high of almost 8,500. And then these lows are getting a little bit higher incrementally. It's a little less obvious than the highs getting lower. But this is tightening up. And as this continues to tighten up, eventually it's going to start to expand and then also start to rise as well. And what we're really looking at is when does that tightening start to loosen up and when do you start to see the movements up? Because even if you did get a big spike in the next week or two, it would come back. There's too much tension. There's too much trading activity happening around these levels for any major movement to be sustainable. And so I say that because that's why I'm not getting hung up. That's why I'm not trying to trade this day in and day out because it's really hard to get major moves unless you're using huge leverage, which is its own beast in itself, right? So if you are, like me, obviously I love the process of trading. I'm very interested in trading. I've been doing a lot of it. But with Bitcoin as an asset, this is not really a very good time to be getting super into the nitty gritty. unless you really know what you're doing and you're using a lot of leverage and or you're trying to, use a lot of money in that sense. So we're going to watch that, right? That's kind of a long way of saying we're going to watch it bounce up and down until we have clearly seen that this, what is probably going to be considered an accumulation phase, is done. I think the other thing that we're going to look for, other than this bouncing zone, is some sort of dump. We saw it, I think it was on Friday, with altcoins especially. I mean, it was just red across the board. And I haven't really been paying too much attention to altcoins, to be perfectly honest. But I opened up CoinMarketCap and it was just like red. It also makes you realize that even if it goes down, something goes down like 90%, it could still go down another 50%. And it kills you, especially when there's no liquidity. That's when you really start to be like, oh man, what's going on here? So it kind of tests your long-term vision of what's going on. The reason I bring that up, that's another thing that hasn't really happened yet in Bitcoin. And even if it's only like an hour long, right, where you see a big dump candle that just gets bought up real quick, that's what we saw previously last year. We saw that in February, obviously. We've seen that a few times. I think we need one or two more of these just capitulation wicks to just dump down. Maybe not, it could easily not happen, but I do think that we need one more real freak out. May not last very long, but that's kind of how I'm looking at this right now. I'm really in a holding pattern. No pun intended. I'm kind of wait and see and for this whole chart to work itself out, because right now it could go a lot of different directions, and in my opinion, it's not a great probability unless you zoom in really, really small time frames. That's not really how I want to trade. So that's where we're at Bitcoin. Flipping over to the CoinMarketCap, I'm just going to refresh this. And you can see that it's still all moving together. And what's crazy is two things. One, this is all still moving as, like, the way Bitcoin moves, most of these altcoins continue to move, right, as the dominance increases. So that makes me realize that there's nothing new in that sense, where you're really just watching Bitcoin, and any major movements that happens on altcoins are really a byproduct of that movement. The other thing that you're noticing, or I'm noticing at least, is that when you get, as these market caps drop, these percentages are very vastly amplified, where you can have a lower liquidity token. Like if I'm just scrolling down, let's look at, WAX, right? That's as a point of just an example. 68. So it's a $68 million market cap. If you scroll back to late 2017, 450 million market cap. So the percentage gains when you're down at these levels can be a little deceiving, especially if you're used to, like, oh man, we're getting these. It looks like there's so much progress, when in reality the real gain isn't that big. It's just that a certain number of people bought it on an exchange, and that moved the market so much because there's not enough to buy. So I think that's one of those psychological tricks where you see these increases in price, when in reality it can really just be one person who throws $50,000 at a coin, and they can make it look like it's going up 30 or 40% because of these small pools, right? This is what happened with penny stocks in the 90s before all the regulations happened. It still happens to a certain extent, but just be wary of that. Be careful with that. If you're looking to trade altcoins, I would definitely recommend sticking to the top 20, 25, purely from a liquidity standpoint. You're going to get faked out a lot less often, and that's half the game. And we'll dive into some more details on what's happening with some of these altcoins as I get back into this space. But I do think that that's something that I'm seeing a lot of, is that people forget that liquidity piece. Even if you're only putting in a couple $100, you can still move the market on some of these coins where 5 months ago that wouldn't do anything. Same can be true with Bitcoin. You use a lot of leverage. All of a sudden, 10%. It's like a lot of, it's hundreds and hundreds of dollars, if not thousands of dollars. All right. let's get into some bigger topics here. One of the biggest topic has been Bitmain's IPO. Now, the news started with Bitmain coming out. You can see how my brain is still kind of like all over the place. So bear with me on this. But Bitmain's IPO, they released, I'm pretty sure it was leaked, but then it came out as public. Their slide deck, right? So if you do an IPO, if you're raising money, you do it privately, then you go to an investment bank. Typically, they kind of package it up. The bank goes out and raises a lot of money on your behalf, and then they structure the deal so that it can be issued with shares on a public exchange, yada, yada. That slide deck was leaked to the public. You may have seen it all over Twitter, wherever. One of the biggest developments from that was that they own massive amounts of Bitcoin Cash. They obviously own a massive amount of Bitcoin, and their valuation is strongly tied to the price of Bitcoin and of Bitcoin Cash. And so there's a lot of skepticism about, are they going to dump it? Can they even dump it? Are they going to pump the price? What's going to happen? But I think my big takeaway from that is that it shows what the incentives are of some of the top whales in the ecosystem. It shows just how much they own and just how much they can control this price, like, pretty easily, right? And I think it's very easy to forget that. We think that this is an established kind of mature market, especially if you're kind of new to trading or new to investing, when in reality, there's still huge amounts of unknowns and people that are like, hey, here's our valuation, but next week it's actually not worth that. And so a good example is SoftBank. If you don't know SoftBank, it's a huge company. I believe they're in China, maybe Japan. Right, one of the two. And they own, it's like a holding company. They own like a lot of gaming companies. It's just like a massive investment company. And they decided they are not going to invest in Bitmain, at least in the pre-IPO phase, because of this exact thing. Because they're like, you own so much, but the price is going crazy and it's being manipulated. You can't put your book value, which is the value of all your assets. You can't put that if your book value is based on speculative things. So this is going to be really interesting, right? Theoretically, if you played the game theory game, Bitmain would pump the price like crazy as they're raising money to make their company more valuable. Or they may dump the price to value it at a very low valuation to get it started. And then once the shares go public, they can just pump it like crazy. And then it's kind of, it's liquid on a whole new level, and all this new institution or retail money can come in and pump it like crazy. We're not really sure how it's going to happen. Obviously, there's laws involved in this, regulations involved in this. But the big thing that I'm seeing is that you're seeing Jihan, right, who's one of the co-founder of Bitmain. Guy's really smart. Okay, he's not just a smart business person with how he kind of built the whole mining ASIC kind of empire, but he obviously knows this game as well, right? He knows that there's something going on. There's a huge opportunity here, and he's basically using the market as a way to leverage his own company. And so this is going to be an unfolding story. Do not underestimate what these guys can and will do to go big, right? There's a huge, especially in the Chinese culture, there's a lot of pressure to make a lot of money. The reason I know, or my experience has been, I probably hired 50 or 60 developers over in China to build mobile apps, right? Like iPhone apps. And I used to talk to the project managers all the time, and they would tell me how when you grow up in a place like China, there's a lot of pressure to move up and to make money. Now, I don't know specifically about Bitmain or Jihan or whatever, but I do know that there's that culture. There's a lot of that going on, and you never want to underestimate that. So take that for what it's worth. We'll keep this story going. As I dig into it a little bit more, we'll be able to get some more conclusions, but something to keep in mind. The second big piece of all this, or I guess the transition of all this, and the thing that I've been thinking about a lot over the last month or 2 months, as you guys have followed this, is crypto, or Bitcoin specifically, as an asset class versus crypto as a like a real world product solution type of deal, right? So what I mean by that is, on the one hand, you've got Bitcoin, where the narrative and the story is like, look, it's going to create peer-to-peer money, or it's a store of wealth, however you want to define it, whatever. But it's going to free us from banks. It's going to free us from the collapse of the world. As Peter Thiel famously said, Bitcoin is insurance of the world collapsing, which it's I kind of agree with that. But there's this whole utility side of Bitcoin. Like, what can crypto actually do? And when you have that narrative, that value gets built into the price because people believe that's what it's worth, right? They don't necessarily care about the trading activity or the price levels or the price action or the order books or any. They're like, look, this is worth. There's 500 million people. Everyone's going to be using this. This is going to be worth $500,000 or whatever, right? That's a generalization. On the other side, you have this idea of things that are purely assets. They do not really have any utility, but they can be traded because they are a liquid market. They are regulated, and they are also just agreed upon that it's okay. Here's what the price is. Here's what the delivery mechanism is. Here are the exchanges. And you can see that in any asset, right? So if you go on something like cmegroup.com, this is like the CME futures, and you go to trading, you can see all the different futures products they have. These are all examples of assets and or asset classes, right? If you can go check and see what this is. So metals, things like gold or silver, or platinum or palladium or whatever, interest rates, foreign exchange, equities, blah, blah, blah. And so when you open up the Bitcoin futures, and you can see what the volume is, which looks small, but remember, this is 5 Bitcoin contracts. So one Bitcoin future on CME is actually worth, 5 times this. So 6,400 times 5 is like $30,000 or whatever. So that's actually $300 million being traded every single day, which that's a good amount of money when you compare it to the spot trading, BitMEX excluded. And so I'm bringing this up because on the one hand, you've got the narrative, you've got the idea, you have the story of Bitcoin, which is really what 2017 was built on. It wasn't really built on the idea of an asset because you couldn't short it or anything like that. 2018, you're starting to see it being treated much more like an asset, which is traded in futures and regulated, charts and everything like that. And the narrative is becoming a secondary piece of the puzzle. It's not going away by any means, but it's not getting built into the value that you see every single day, the price that's being traded at, and therein lies the paradox, right? Which who's right? And at this point, nobody knows because we're still so early. But I think that's the question that everyone needs to be asking themselves every single day: is Bitcoin an asset? Or is Bitcoin a true solution to this central banking problem that the world is going to run into in the next 5 to 10 years? And I don't know the answer to that. But I personally, while I do believe in what crypto is all about, and I definitely believe that there is a huge future in this market, I personally think that Bitcoin is becoming more of an asset than a solution to specific problems. And the reason I say that is because when you look at the big picture, when you look at things like governments adopting Bitcoin or cryptocurrency, when you look at mass institutional markets, adopting it, the only way it gets absorbed as a solution to a problem, kind of like how gold would be considered like a gold standard, you really need everything to fall apart, and then you need Bitcoin to be not only the only option, but a very like a guaranteed option, like a very, very high probability where you can't manipulate it like silver was manipulated back in it was like the 70s, right? The Hunt family, I believe it was, they cornered the entire silver market, right? Stuff like that, where Bitmain is doing that with Bitcoin Cash type stuff. And so I think the narrative side, I think, will evolve. I think we need to see some major catastrophes to happen, or not even catastrophes, huge institutional systemic problems with central banking, which I think will happen in the next couple of years, where Bitcoin can come in and it can actually, it's a necessity at that point. Until something like that, I think you have to start to look at this more like an asset as opposed to a story. Don't think the story is by any means like taking away from what the value or long-term promise of this. Story is just that's what it is, right? It's what you tell people. It's what you believe. That's what I've been thinking a lot about. And the more you look at this, you look at all of these as purely as assets, you start to look at it maybe as like a trader, but you start to also listen to the traders more than you start to listen to the people that are just telling you what you want to believe. And that's a huge piece of the puzzle. I look at something like security tokens, and I think that this is another very good example where the security tokens, there's an amazing story of that where like they can securitize virtually everything and it's going to add all this new wealth to the world and XYZ. But our security token is the place where all the value is going to go. I don't know. But maybe eventually, but or will it just be like a flow-through, pass-through thing that allows you to then buy into the other asset that has the real value, right? And that's the other big piece of all this, is that if an asset is trading, is that where the value is stored or is the value somewhere else? And so as you're looking through your portfolio, as you're looking through things like altcoins, security tokens, Bitcoin, whatever, is the thing that you are buying where the eventual value will lie? That's why I think Bitcoin's a really good bet in terms of if you're going to evaluate anything in crypto, I think Bitcoin still is the best bet, because I do think that the coin itself will eventually be the thing that's valuable. Whereas you look at some utility tokens, you don't necessarily want a utility token to be consistently going up in price. You want it to be pretty stable. Now, it may go up for a while and then stabilize at a higher price than what we have now, which is a good investment. But at some point, anything that you're using, you don't want it to change very much unless you're trading it, which then gets back to the whole idea of being an asset. And that, I think, is a huge piece of the puzzle. I mean, like, that's why you look at something like security tokens. I think the tokens themselves may find a stable price, but the assets they represent may go up more than they would if it was a stock or if it was put on like a real estate website where that was the market it was in, as opposed to a liquid market like security tokens. There's a liquidity premium there, but the tokens themselves are just like it's a wrapper, if that makes sense. So this is a topic that I consistently. I was talking to someone who's big into gaming. Right? I personally think gaming is going to be like one of, if not the big crypto breakthrough use case, other than things like Bitcoin. But we were talking and everyone's like, oh, well, like, look at all the gaming coins out here. Wax is one of my favorite coins, or one of my favorite companies. But now that I look at it, I'm like, okay, well, I look at Wax. I look at the company it represents. I believe it's Opskins is the company it can be used in. I mean, it can be transferred. And I think to myself, all right, if I was a consumer, if I was playing the game, and there was a currency, if there was Wax tokens, and I wanted to go buy this shield or this gun or whatever you're buying in the game, which of those two things will go up in price? Will my Wax tokens consistently go up, and the the shield or the gun stays at a even price, like it's worth 100 wax, and because wax tokens go up, like that means the shield goes up, or will wax tokens become standardized and then the unique products in the game go up? I think you can make an argument either way, but that's what you need to ask yourself. You take that a step further and you start to ask yourself, well, is it the tokens that where the value is going to go, or is it the company? Right? A good example of that is something like Civic, right? Like an identity company. Is the token going to be valuable, or is Civic the company going to be valuable? Because a token does not give you equity in the company. A token just gives you the ability to use the service of a company, at least in the utility token sense. And so you start to get all these questions that are unfolding that I'm seeing as kind of an outside market participant, somebody who hasn't been too deep into this for the past few weeks. And this is where I'm starting to be like, wait a second. If these are truly just assets, where's the value going? Where does the value end? Does it end in equity? Does it end in consumer utility? Does it end in token value? Does it end in asset price? Does it end in like, where does it end? Because wherever it ends, that's what goes up. In the stock market, in companies, it ends with stock price. So the stock goes up, et cetera, et cetera, et cetera. So it's something to think about as you are making your decision, as you are buying, whatever you're holding. Is the token, is the thing you own where the value will end, where the cash will eventually end up? Bitcoin, I think the answer is yes. Ethereum, I think it could go either way, right? I think that, there's so much that can be built on Ethereum. I don't know if Ethereum is necessarily where the value is going to end as much as Bitcoin, right? So something to think about. Finally, probably the thing I'm most interested in watching these days is what's going on with these emerging markets, especially their currencies. I mean, on a personal note, I think that this is just terrible. Or not even that's kind of a patronizing word. I think it's insane to me what's going on in places like Venezuela, in Turkey, to a certain extent Italy, or maybe soon Italy. South Africa is kind of on the verge of this. These emerging markets that are having these like crazy currency devaluations, driven many times by corruption in the government. I would say that's probably the leading cause, especially in Turkey and Venezuela. But you're just seeing this start to permeate itself. And a lot of that, I wouldn't say it's directly because of the US dollar. That's a piece of it, right? Meaning there's investments in these emerging markets that are either denominated in dollars, or people are selling their investments to go buy dollars because their currency is going down. So they want to buy something that's strong and stable, relatively speaking. But you can see a lot of money flowing in here. Obviously not in the past couple of days. It's retraced, which incidentally, I think it's going to continue down for a little bit until it pops back up. But this is a big deal. One, we all saw one of the craziest, probably the craziest bull run ever last year with altcoins and Bitcoin. The things that are happening in emerging markets as a trader are just as insane. I mean, you're getting the same parabolic potential on these emerging markets. So as a trader, as somebody who's looking to make money, this is an opportunity if you are okay with basically profiting off of countries collapsing. But it is a huge opportunity, especially some of the bigger countries like Turkey. That's why it's a big deal, is because it's a big economy. It's very strategic in its like location geographically, and its relationships with oil and Syria and all that sort of thing. So that's one. And we get so hung up on being like, oh man, altcoins, I can't wait for this next alt season. If there is ever going to be an alt season, you forget that there's an a quote alt season happening in the real world right now. It's the same thing. Like, it's just Forex gets traded on massive leverage, but that's why you can get, but the curves look the exact same. And this is not going to slow down. I think that this is just going to get crazier. I think that emerging markets may bounce back for a while, but over the next couple of years, while this is doing this, while Bitcoin is bouncing around, while altcoins are kind of popping around pinball wise, keep an eye on this stuff. This is really important. The other big reason why this is important, taking this whole thing full circle. Remember, we talked about the narrative and the asset side of something like Bitcoin. You took the narrative. The narrative for Bitcoin, the strongest narrative is it's a store of value. It's free from government control. It's completely decentralized. And so if everything else falls apart, you can put your money in Bitcoin and it'll be maybe not safe, but it'll be, it can hold its value much more securely than something like the Venezuelan currency. Okay? But here's the thing. Turkish currency got completely crushed. Was it last week? Maybe 2 weeks ago. The Venezuelan currency got completely crushed, is getting completely crushed. Now, this is a lot newer. But you don't see a huge spike in buying Bitcoin in these countries. Now, there's a lot of reasons for that, obviously. Like, there's no exchanges. It's harder to buy. The local Bitcoin market's much, much smaller. The population just doesn't have the money. They may not have the education. There's a lot of reasons why that may not be happening. But this whole collapse is one of the reasons why Bitcoin theoretically should be successful. And the question is, why isn't Bitcoin going up while all these emerging markets are going way down? Like I said, there could be logistical reasons, could be other reasons, there could be regulatory, governmental, there could be pressure not to die. I mean, who knows? But that, to me, that's pushing me to look at this more as an asset than a narrative for now. That's why I think we need much bigger systemic problems on much bigger countries before that narrative comes through on Bitcoin. Otherwise, we would see this working really well. Now, Venezuela, I mean, I would say they actually did make a good amount of moves with mining last year. They have very, very cheap energy because they have so much oil. But I think it's illegal now, if I remember correctly. So there's all sorts of different things to keep in mind. But I can't stress it enough. We are past the days of speculative fervor in cryptocurrency. It's not going to be like it was last year. I actually did a podcast. I need to listen to it, and then I'll link it up probably tomorrow or the next day, next video I do, and you can check it out. And the last thing I say in this podcast, which is kind of like dire advice, but the last thing I say, and this was 3 months ago, 2018 is not going to be what 2017 was. And if you're waiting for it to be like 2017, you're going to be sorely disappointed. Doesn't mean it's going to be less, worse, or better. Doesn't mean you can make more or less money. I mean, you could actually make way more money this year. It just means that it's a different beast. And the beast that it is that you're starting to have to connect this Bitcoin thing over to this emerging market, real world foreign exchange future market thing. How does that connect? Right now it connects through the regulation, through the on-ramps. That's what everything's being built with the institutions. But over the next year, it's going to be connected as these countries have the ability to buy it. Like you'll see an inverse relationship the same way, like way back in the day in the 80s and 90s. There's an inverse correlation for gold. If you look at the 2000s in the United States, at least, you saw the S&P 500 tank, or everything tank, but you saw the gold index go through the roof because it was basically opposite of the equity world. Now it's different because gold is way more speculative. There's just so much going on with gold. Bitcoin may have the ability to do that. That's the thing to watch. It's not going to happen immediately, but it will happen. So a lot going on, a lot of very interesting things in the macro global world, whatever you want to call it. But I think that's the interesting story that most people should be watching, as opposed to what many of us do, myself included, where you zoom into the 15-minute charts and you're like, all right, where's the next big pump? How can I scalp this and run massive leverage on this trade or whatever? It's not a long-term sustainable thing. And we're trying to think bigger, think better, think smarter, make more money, all that good stuff. Cool. Well, it's good to be back, guys. Always great to chat with you, as always. Subscribe, hit the thumbs up button, rock and roll. Like I said, I'll probably be back next couple of days. Definitely 2 times this week, maybe 3 times as I get back into the swing of things. And right on. We'll be chatting. I will see you guys next time. All right, peace out.